How we doing, everyone? How are we doing today? Today is Monday, May the 17th, 2021, and we are just recording a video for our real estate lunch talk for today, the 17th of May, 2021, where we just try to bring relevant real estate and real estate investing news to those out there, hopefully able to help them make decisions on either their personal residence or getting involved in real estate investing. So that is the reason for our videos. Just to let you know, tomorrow, the 18th of May, 2021 at 7 p.m., we will have a Zoom meeting with Scott Ritchie as our special guest. He is from Next Generation Trust Company, excuse me. Next Generation Trust Company, a self-directed IRA company out of Roseland, New Jersey. So he'll be on and talking about self-directed IRAs, and I'll be on as well talking about how you can use a self-directed IRA to invest in real estate as well as other asset types. So if you are someone that is working, has a retirement account, may have worked somewhere where you left that job and had a retirement account at that job, we're going to be talking about how you can still use that money to not only invest in the stock market or paper assets as was traditionally done with IRAs, but you can have more control over your retirement money and what it gets invested in. And the way to do that is with self-directed IRA. So if you'd like to join us at 7 p.m. tomorrow, the 18th of May, there'll be a Zoom link that we'll post here in the comments. If you'd like to join us, please do. And please share it with, people that you may know, other people that may be interested in attending and getting this information, feel like it'll be valuable information, for everyone. So we hope to see you there and, and get this information. Hopefully it helps you, obviously grow your retirement account, grow it faster, grow it more securely, and take more control of it. So that link will be in the description, or in the comments, I should say. So with that, there's a couple of articles. I think there's about 3 or 4 that I saw that I thought most people, should know about, should look into, when it comes to real estate. So we'll go through those. We won't be here long. Again, we're usually on here, anywhere between 20 to 30 minutes. So we don't try to keep people too long with this information, just hopefully give you enough. And then, obviously, if you'd like to follow up with us and talk to us a little bit more about this, you can always do that. So this first article says first-time homebuyers are getting outbid by big companies. So this was a very interesting article. So I'll just read a little bit of it, and so people are aware of what's going on. A lot of this prices going up and things of that nature are, a lot of these companies dumping money into these properties and driving the price up. So home shoppers aren't just competing against each other in bidding wars these days. Landlords, large and small, also are lining up to buy homes to use investment properties. According to a recent study by Irvine-based John Burns Real Estate Consulting, highlighted by the Wall Street Journal, about 1 in 5 homes sold in 2020 were purchased by investors both nationwide and in Southern California. The study found it could be institutional investor groups, publicly traded companies, pension funds, or even large foreign behemoths. Locally, however, mom and pop ventures are responsible for most Southern California investor purchases because of the region's high home prices. First-time home buyers and other low down payment buyers less than 20%, for example, cannot compete. The big boys come in with cash. They have the financial resources to win every bidding war. No contingencies, no fuss, no muss. Close fast as you can. So, um, this is very interesting. These first-time home buyers and even people that want to buy their second home are being affected, um, by these larger companies who obviously have more money at their disposal and can, buy properties and then hold on to them or rent them out. That's why we're seeing such an increase too in rents. These companies have this cash or are borrowing this money cheaply because you can borrow money right now for very cheap and go in and buy these houses. You have a low interest rate on the money, compared to traditional interest rates, and you're able to rent the properties for a high amount. So your returns on them are still good. And so what happens is you get a lot of first-time home buyers and traditional buyers that are getting priced out. So I thought this was very interesting, and goes along with what we've been talking about too, in terms of if you do have properties, you could refinance your current property. You could take out a home equity loan on a property that you have and try to go out here and purchase another property with that money. Leverage that money so you can go out here and you may not obviously buy in California where this article is talking about, or maybe you don't buy specifically in the Northeast because of pricing, but there are markets around the country where you're able to buy properties for under 150, under $100,000. And we've talked about that previously. And what we try to do is get people involved in note investing in some of the lower priced assets. If you do take out $25,000, $50,000 in a home equity loan of your house, and you look at that interest rate, the interest rate most likely is going to be, let's just say, under 5%. Or, let's say between 5 to 6%, just to, I'm not absolutely sure what the refinance rates are, but I know that they're low because of the traditional people who are qualifying for mortgages are paying like 3%. So usually somewhere around 5-6%, double that is what you can get, and maybe even lower in a lot of cases. So if you have a loan on that $25,000, $30,000, $40,000, $50,000 home equity loan, or if you refinanced and just pulled the cash out, you can then put that money into a real estate note where you're getting 6, 7, 8% or more on that money that you've borrowed for 5% or 6%. So you're making money on that money that you borrowed, and what you're doing too is you're adding to your passive income that's coming in. So that's what we've been talking about and what we've been trying to bring. But as you can see, some of these larger companies are jumping into the market and driving up prices in a lot of these markets. But there are a lot of markets where they're not buying in. A lot of times these companies, because they have the money, are focusing on the New York Cities, the Chicagos, the big market areas. And you have some of these other markets that may be just outside of those big markets, maybe about 30 minutes to 60 minutes outside of a major city, where you can get a lot better pricing. People want to live there. And it's actually going to tie into another article that I saw. So I'll talk about that once I get to that article. But and now when you do this, if you do the note, that's great. Or you can buy properties that are cheaper in these other areas, and then you can create notes for these first-time home buyers who are getting priced out of the market. Like I said, in 30 minutes to 60 minutes outside of a major city, people who obviously either have a car or the public transportation makes it accessible to get into the major area if they need to go to work or something like that, would be willing to buy a house in those markets. So if you again took out this money, leverage this money that you're taking to go into some of these lesser areas in terms of price, you can create a note for a first-time home buyer who most likely has a good down payment, has the credit, is working, um, and you can offer them, um, these homes, because a lot of times these companies are just going with, the real estate agent stuff that's on the MLS and everything like that. But things that are outside of that can create, a nice space for, first-time home buyers to get into a property. And then what they may do is that within a short amount of time, maybe the first year or two, maybe they'll refinance you out. They'll refinance the property on a note that you created. So you've collected payments for over a year, then they refinance the property, then you get a lump sum, maybe within the first couple of years in this scenario. So this is, another reason why we like note investing. We try to get people involved in note investing and creating notes on particular properties. So it gives you something, more to think about, and it's not always going to be right here in the New Jersey tri-state area. You may have to go into some other markets, but why not? We have the power of the internet, and we can be connected with people in other areas very quickly and make sure that we have all our bases covered in other states. And that's something that we kind of walk you through as well, so you can feel somewhat comfortable knowing that your out-of-state investment is protected and would be performing well for you. So I just thought this was a good article with everything going on. And even with they have this tax credit they talk about $15,000 for the first time home buyers, but if people aren't able to take advantage of it because big companies are taking these properties for them, it creates a big opportunity for those who can create what's called seller financing or create notes on properties. If you own something free and clear, this is a great way to get somebody in there, get a nice chunk of change up front, get you a monthly income stream, and then at some point when they buy the property from you, or when they refinance, I should say, because they are going to be the property owner, you get another lump sum. So there are three profit centers here when creating notes and getting involved in notes. So, that's the first article that I talked about, and we'll put that in the comments as well. For Article 1, how about that? And the second article here, it ties in kind of to the first one, is that employment options weighing heavy on home buyers. It says nearly 60% of new homeowners who purchased within the last 12 months are working from home, and 62% prefer to be. Despite it being the clear preference, just 48% of the total have been told by their employer that they can continue to work remotely. 1 in 4 of those surveyed still have no definitive answer on whether or not they can remain fully remote indefinitely, and another quarter already have plans to return. So again, more people are most likely going to be working from home. Even if some of these people, do come back to these buildings and office spaces, it may be something where, half the time is spent in the office and the other half is spent at home. But will people, definitely go back to working in offices? And I think that companies may opt not to have to pay for these big buildings and this rent that they have to pay when they can have their have their employees at home working, And as long as the efficiency and the job is getting done, I think employers are going to choose to, allow people to stay home. And that's going to, be another reason why people are going to be looking, for homes. And this is one of the reasons why you've seen a lot of people drive up the pricing on homes because they want to move from the 2 or 3 bedroom apartment that they have, and they want more space because they need some place to work in, and they don't want to be crammed, in the house all day. They want a separate space that they can go to and work. So that kind of contributed to the increase in what people would pay for certain living spaces. And then two, you can actually write this off on your taxes. If you are a self-employed person, you can use your home as a tax write-off. I'm not giving tax advice or legal advice in any way, but there are ways that if you do set up your home to have an office, that your tax professional can make sure that you get a tax benefit from that. And that's something that you would have to talk to them about. But again, this kind of goes with, if you can create an opportunity for somebody to buy a home with creating a note or seller financing, they're going to be incentivized to do it because they're working from home now. And then this ties in with the other article, being shut out by some of these big companies that are buying up these properties. It's not leaving a whole lot of options, especially for first time home buyers. So that's a reason why I wanted to kind of talk about this article. It says, throughout the last year, we've seen home buyers across the country empowered by the newfound ability to work remotely, moving further and further from the crowded urban downtowns in search of more space, higher quality of life, and a lower cost of living. So this kind of goes back to what I said about that radius around a big city. If you can be 30, 45 minutes to an hour, maybe outside of New York City, Chicago, Los Angeles, what other big city? I guess what's Memphis, or Nashville, Tennessee. If you look at some of those surrounding areas, there's some opportunities there, especially when it comes to home pricing, that you can invest in those areas, buy those properties, create seller financing or some type of note on the property for somebody to get in there. And now you have a nice asset, a nice area. And then, how I explained, the 3 different ways that you could profit, it all makes sense. But again, you have to feel comfortable knowing that you're investing outside of your area. You're not going to be able to get in a car and just drive to the property, anything like that. But as a note investor, you are not responsible for the maintenance on the property. So you're not a landlord. You're what you call a lien lord. There's a lien on the property, and you are just receiving mailbox money. So this is something that, again, that we're trying to get out there to people, trying to get people's minds wrapped around it if they haven't already, and to know that there is an opportunity out there in some of these areas. So, this, like I said, tied into the last article. So I wanted to talk about that one. So let's put this one in the comments as well. So if anybody wants to go and look at it and read the article for themselves, they can do that. Now, this article here could be for traditional home buyers and sellers, but probably more for investors. The Section 1031 exchange, Section 1031 like-kind exchanges under threat of Biden administration. So this is kind of maybe something that you're not going to get the benefits that you once could through a 1031 exchange. 1031 exchange is basically when you have a piece of property You sell that property. Those proceeds go into what is called a 1031 exchange, and you have a certain amount of time to identify one or more other properties that you want to buy with those funds, and it doesn't get taxed because it's in the 1031 exchange. You just, it's kind of a pass through to buying another piece or other pieces of real estate. And it looks like there's going to be some adjustment on how 1031 exchange gets taxed. So, if you are an investor or someone that uses these, you're going to have to, think about what the effects of these new of the changes are and how it's going to work or not work for you. So it says last week, President Biden released the details of his 1.8 American Families Plan, which included $500,000 on a cap, $500,000 cap on like-kind exchanges as a means to pay for the proposal. The results of the study of exchanges accommodated by the IPE 1031 exchange and other qualified intermediary companies over the 5-year period indicate this proposal would effectively eliminate commercial real estate exchanges as well as large percentage of farm and ranch exchanges. Usually those types of exchanges or deals would be over this $500,000 cap. And so the taxes that would not have been given on those are now going to be taxed, it looks like. The administration's proposal is based upon a misguided view of the actual purpose and benefits of like-kind exchanges. The 1031 is a tax deferral tool and not a tax avoidance loophole. Section 1031 encourages real estate's transactional activity, and in doing so is a powerful stimulator of the U.S., state, and local economies. It is neither unfair nor abusive and has been recognized by past Congresses as a critically beneficial economic tool since having been first enacted 100 years ago. So, it looks like, these taxes, I'm not sure if they went into effect or not. Let me see if it says that. Doesn't look like it has gone into effect right now, but again, once you start seeing articles like this, you start getting the buzz around certain things like this, it looks like it probably will. The Congress right now is majority Democrat. They do have the tiebreaker unless one or more of the Democrats do not vote to go along with this. It's probably something that may get implemented. So it's not right now, but you have to think about it if you're taking maybe larger sums of money to invest and putting in a 1031 exchange. You probably want to do it sooner rather than later because this these new taxes on it are going to go into effect probably sometime, if not this year, and going into next year. It says like-kind exchanges are broadly used by taxpayers ranging from middle-class individuals exchanging rental houses and small apartment buildings, farmers, small to mid-sized businesses, and taxpayers exchanging large commercial properties in major metropolitan areas. Industry studies have estimated that elimination of Section 1031 would depress the commercial and farm real estate economies. Further, given the administration's proposal to raise federal capital gains tax rates to 43% and eliminate the step-up basis, Section 1031 becomes indispensable. So, they could have a big effect, obviously, on the commercial side of real estate and also farm. And, we'll see what happens, but this is just something for, people who have larger amounts of money who are, used to maybe using 1031 exchanges, or if you're someone that has thought about it, you probably want to do it quicker. Do it now before these. Maybe you can get grandfathered in to the old tax benefits of it, because obviously once it changes, then you'll be subject to the new tax laws on it. So I thought that was some good information there. Let's see, that's management number 3. And then this last article here is about federal judge vacates CDC's nationwide eviction moratorium. So, I mean, we all know that at some point the moratorium has to end. But this particular judge in Washington, D.C., on Wednesday of last week, ruled that the CDC overstepped its legal authority by issuing a nationwide eviction moratorium. So, and this could affect a lot of people if this is upheld, because if this is upheld, then other states are going to, put this into effect as well. And so the people that, obviously haven't been paying and may not have the ability to pay are going to have, they're going to face some tough decisions coming up. So, and then this obviously, people are getting evicted out of their place. Where are they going to go? Are they working? Who's going to replace these people in these units? If you have these um, these rentals and these homes, what are you going to do? Where are you going to get these new people from? And I think that as we discussed, if you create the note and the seller financing, you have a lot more buyers that will be willing to buy and in position to buy, as opposed to maybe renters who may not have the same job stability as somebody looking to buy. So that would be a difference too when it comes to doing rental properties, as opposed to offering seller financing, creating a note, and making someone a homeowner. That you would have to think about if this does, go into effect. So there could be, and then you have these other people too with this moratorium. This would go for, I think this is just the eviction is saying. So this doesn't necessarily talk about the foreclosure part of it. But I mean, if they can say you can be evicted, who's to say that that you that this won't carry over into foreclosure as well? So this could be an opportunity for a lot of investors to pick up properties. Um, if this does stand up, and if it becomes more of a trend around the U.S. So it is something to keep your eye on if you are an investor, and if you're obviously someone who is renting and in this situation, you want to start to, try to think about what your options are moving forward and get yourself prepared for this. So, thought that was a decent article to talk about as well. So those are the things that I just wanted to talk about today. I have all 4 of these articles in the comments if anybody wants to go and read them. But it has been just about 30 minutes. And we usually stay on here, like I said, for about that much time. And we just try to bring relevant information. Hopefully it made sense. If you have any questions about anything, you can always put it in the comments. If you want to reach out, telephone number is 973-475-8488. And you can email me at acg@abundantcapitalgroup.com. We're also on Facebook at Abundant Capital Group. My personal page is Gilbert Ross. The business page, obviously, is Abundant Capital Group. And we're on YouTube at Abundant Capital Group, as well as Instagram. So please reach out with any questions. I'll post these on all those platforms. And, hopefully it's some information that you can take and help you in making a decision either in your personal life or in your investing life. So I'll talk to everybody soon. We'll be back on Friday. We'll be posting another one. Remember, we have the event tomorrow on Tuesday, May 18th, 7 p.m. With self-directed specialist Scott Ritchie of Next Generation Trust Company. So please join us at about 7 p.m. And we'll be back tonight, 7:30 p.m. We'll be talking about real estate note investing a little bit more in detail. We've been talking about, we've been doing a series on, let me check real quick. I forgot. Let me see. Oh yeah, we're doing a series on strategies for people who have lower retirement account balances and lower amounts of money to invest. So we're doing a series on that, on different ways that you can use a small balance IRA or retirement account, or small balance money you may have in the checking, savings, or somewhere else to invest. So we've been kind of going through different ways that you can do that. So, hopefully if you're somebody that has a smaller amount of money and been thinking about, how can I get this money to work for me? How can I invest it? We're giving you some tips on that. We're doing a little series on that. So join us tonight at 7:30 on our social media, Facebook Live, as well as Instagram. We'll be on those two. So if you want to join us then, not, we will see you either tomorrow, which is Tuesday, May 18th, or we'll do this again here on Friday afternoon. We'll post another one of these videos for you. So with that being said, everybody have a good day and take it easy.